Good morning. It's Market Day Report. So glad you're with us to start another trading session. Now, the trading session will start in 14 minutes. But before then, we look at how markets traded in the overnight session. Here's a number I want you to think about. 42.2 million bushels. 42.2 million bushels. That's a lot. So why are we talking about that? We'll explain in just a moment with Brian Hoops. First off, overnight action, corn market and higher at 427 on the December contract, up 0.75 cents. And again, that's looking at corn. What about soybeans? Bean complex was, well, mostly higher yesterday, except for soy meal contracts, which settled lower. But a little bit of a gain in the overnight session for beans, up 4 3/4 at 10.16 3/4. How about the wheat market? We'll start with Chicago first, up 2 3/4 at 5.23 1/4, and Kansas City up 3, 5.14 1/2. Spring wheat, the overnight session higher, and the cotton market overnight down 32 at 66.32. Brian Hoops is president, Midwest Market Solutions. So I threw that number out, 42.2 million bushels in 5 days. What are we referring to?
Well, I think what you're talking about is our cumulative corn export business on private sales that we've seen here. We had 3 private sales last week. We've had 3 private sales so far this week in 3 days. There was another sale this morning, over 300,000 metric tons of corn sold to Mexico. They continue to be by far and away our best buying customer. There was also a sale of 101,000 metric tons of soybean meal sold overnight, and that was to Guatemala. So we are getting some export business. There was also news on Monday that China had bought 10 cargoes of Argentina soybeans. And last night, China bought another 10 cargoes of Argentina soybeans. So they bought 20 cargoes, maybe a little bit more than that over the last 2 days. And yet the soybean market is showing signs of trying to respect the 10.06 support area and bounce off of it. We actually closed higher in the night session. We closed higher yesterday. When a market reacts positively to some negative news, that's usually a positive sign. Basis levels going to widen out, and they'll probably widen out even further this week because the 6 to 10 day has pretty much an open window. Warmer than normal temperatures, drier than normal conditions should allow harvest to progress. Basis likely to widen out, but the futures market is looking ahead where prices are going to be in delivery in December corn, November soybeans, and they are looking at maybe trying to find some sort of a bottom and start to push higher from here on out. So market is telling us something. You just kind of have to interpret what's happening, but certainly at these levels, we're seeing very positive export business, especially for the corn market.
You know, Brian, I'm just kind of wondering, has the market finally got to the point that the ship has sailed for beans and China? And at this point, if we do get a buy, then that's something to reward.
Well, I think so. Yeah, Argentina, of course, the news over the weekend was that they were going to lower their export taxes in an effort to stimulate their economy, stimulate some export business, and they're certainly doing that. They have enough supplies to really supply China until they start harvest again in the winter months of February into March. China's bought pretty much all their needs through November. Now they're planting soybeans in Brazil. If things go awry or something happens where they have a poor crop, maybe China starts to step in and buy from the United States. Right now, the market's really fully discounted China buying any business from the United States. So anything in a business sense to China, I think would be viewed as a positive in a very bullish way.
All right. Let's take a break. We'll come back. We'll pick up the conversation on the livestock sector. Another contract high yesterday. What market? Find out next. This is Market Day Report. We had mixed trade yesterday in the cattle market. Live cattle futures were lower, but we saw the feeders moving higher. Look at what happened yesterday at the end of the session. October at 235.67, $1.47 lower, and December off $1.32 at 238.90. Now the feeders settled higher, and with that higher settlement, that's now 4 straight sessions of gains. September, again, will expire next week, 364.95 up 222, and the October at 362.37. That's the most active, up $1.02. And then roll out, there's a 355 for January, March at 351, and then we go to hogs. Hogs higher for 4 straight sessions, and we did punch above that $100 level for October. Let's bring back in Brian Hoops, Midwest Market Solutions. Hogs above 100. Is that meaningful?
Well, it's contract highs for the October futures. You kind of alluded to that. They gapped higher yesterday and continued to push higher. It's been a strong run for these October hogs. Now, the reason is the cash market stayed very strong. Usually it drops this time of year, and the market kind of had anticipated it would fall, and it's held very steadily. You look at the lean hog index, a measure of where the cash markets are, it's up around 105, 106. So October's still discount. And you look at where December is, it's anticipating the cash is going to come down to $90. That's where the December futures are. That's holding a big discount. So cash markets here are going to rule the livestock markets. They are telling us what direction the futures want to go, and the futures need to rally to narrow that difference between the cash and the futures. Now, the cattle market hasn't had any cash trade yet this week, but I think it's starting to price in steady type cash on the front end, with deferred contracts trying to rally, especially feeder cattle rallying sharply, as supplies likely to get tighter, especially into the first quarter of 26. Probably will be our tightest supplies that we are going to see. We're just not placing any animals at this point in time, so that's friendly for those deferred contracts. And of course, as the feeder cattle are holding big discounts, that's really an unattractive hedge when you have futures lower than where the cash markets are, as we saw in the hogs. Futures are coming up to meet the cash. That's kind of what's happening in the feeder cattle market as well.
All right, Brian Hoops is with Midwest Market Solutions. We'll hear you later today on Commodity Wrap on Rural Radio 147 Sirius XM.